Don't let the market get you down. Secure your retirement with income for life with a Navy Mutual annuity. Navy Mutual's fixed annuities keep your after-tax premium deposits growing safely until you're ready to make withdrawals. An annuity can help you generate income that cannot be outlived, reduce exposure to market volatility, and diversify your retirement portfolio. Let Navy Mutual help you secure your financial future. Learn more at navymutual.org/annuities.
At Navy Mutual, we understand that life is constantly changing. From enlisting in the military or commissioning as a young officer to transitioning out and entering retirement and all the things that happen in the middle, you're always on the go. But being busy isn't an excuse to let important tasks slip through the cracks. We know that your financial security and your family's future matter to you, and we're here to protect both. We provide life insurance products that protect your loved ones at the lowest cost possible, as well as annuity products that can help secure your retirement income. As a nonprofit organization founded by military members for military members, we understand the worry that can come with service. But we don't want our members worrying about the quality of life or whether their loved ones will be taken care of after their death. We're here to help you get the peace of mind you need by providing financial protection to those who protect us. So, stay tuned today to learn about annuities and how an annuity can help you either accumulate assets for retirement purposes or generate income during your life or the life of a beneficiary, thereby securing your financial future and helping you live the retirement of your dreams. Welcome. One element of Navy Mutual's mission is providing financial education and making sure that you have the information needed to live your best financial life from the time you join the military community through to your retirement. We talk a lot about life insurance, but we also sell annuities, which have long been used to round out an individual's retirement planning and are often a misunderstood product. I want to spend some time today diving into the details of annuities so that hopefully you can leave with a better understanding of how an annuity might be able to supplement life insurance or existing sources of fixed income to round out your financial strategy. I'm Ellie Matlock, and today I'll be hosting another question and answer session with Bill Wooten, one of Navy Mutual's sales managers and an expert in our products. It's always a pleasure to have you on with us, Bill.
I'm more than happy to be here, Ellie. Thank you.
So I wanted to spend some more time today talking about annuities. They're sometimes misunderstood, but they're actually a really cool product that can enhance an individual's finances and their retirement. They can be a great part of a well-rounded financial strategy.
Absolutely, Ellie. There's so many reasons that a person can benefit from having an annuity.
So before you get into some of those, can you give me a quick primer on what an annuity actually is?
Of course. An annuity is a contract between an individual and a life insurance company in which an individual contributes premiums to the insurance company in exchange for the guarantee of the interest accumulation and the promise of future income payments. Essentially, you make payments now and the insurance company agrees to begin making payments back to you with interest at a later date. An annuity is an excellent investment for many people thanks to its stability and often high contribution limits when compared to other retirement investment accounts.
It reminds me of a high yield savings account.
Exactly. Well, sort of.
Okay.
That's not a bad comparison though.
Okay.
But I do need to reinforce that annuities are not savings accounts, even though they do earn a rate of return. Life insurance companies are not banks. An annuity allows you to invest some of the money with the life insurance company in exchange for guaranteed of fixed income payments in the future. And there are also caveats to how and when those payments can be made.
Okay.
It's not just a holding location in the way that a checking or savings account would be or function. Money in an annuity may not always be accessible in the same way either, depending on the terms of the contract.
Understood. So what else do I need to know?
Well, there's several types of annuities. Briefly, there are fixed annuities, which provide the guarantee that your principal contribution will not decrease and you'll earn interest.
Okay.
This makes fixed annuities a really safe bet because you won't lose money on them. Then there are variable annuities, which are tied to an investment portfolio. Your principal contribution can either earn or lose money based on how the market performs.
So a lot riskier.
Yeah, they can be. There's no telling how the market will perform in the future. Finally, there's the blended option called an indexed annuity. This type of annuity will offer a guaranteed minimum interest rate, but the growth of your contributions is tied to the market index. In years when the market does well, you may earn more than the guaranteed minimum interest rate. This type of annuity also is guaranteed not to lose money, but the minimum interest rate may be less than a fixed annuity.
So it depends on the individual's risk tolerance.
Absolutely. Also, for the purpose of this conversation, I'd also like to point out that Navy Mutual only sells fixed annuities. So I want to spend the rest of the conversation focusing solely on fixed annuities and how they can benefit someone's retirement portfolio and financial stability.
Okay, got it. So now that we know the differences between annuity types, tell me more about these reasons that a person could benefit from a fixed annuity.
Sure, Ellie, that's a great question. First, fixed annuities can be set up to provide a lifetime income, supplementing pension and Social Security payments and creating a stream of income that cannot be outlived, unlike other retirement accounts or even bank accounts that contain a finite amount of money and can eventually run out.
Well, that's certainly a perk.
Oh, it certainly is. This is called life income or a life income payment option, and those payments are guaranteed for the remainder of your life, no matter how long you live. A retirement account could eventually be drawn down to a zero balance, which that's risky, right?
Yes.
So if you outlive your retirement funds, you're now living also off Social Security. Those payments or a pension or military disability payments, if you have them, this can make old age really scary. No one wants to be destitute or relying on exclusively a family to help them out, especially at the end of their life.
Oh, yeah.
An annuity with a life income option can help prevent the possibility and really provide a peace of mind to the individual and their family members. The amount of each payment depends on the interest rate of the fixed annuity, the amount of the contribution, and some complex math, but our reps will walk you through it all.
I hate the idea of anyone thinking they've, failed at retirement because they weren't able to save enough money to account for living to 100 when they thought they might only live until 80.
Exactly.
It's hard enough to think about passing away. This really does seem like a great option for people who want to avoid tricky financial situations in old age.
You're absolutely right. And to piggyback on those difficult conversations, annuities can also be used as a part of a long-term care strategy for individuals who don't have a traditional long-term care insurance policy or life insurance policy with chronic illness or terminal illness features. Income from an annuity can be a great way to put towards that cost of care.
And I'm sure we've mentioned that traditional long-term care insurance policies are falling to the wayside. You'd be hard-pressed to find many options when shopping around. Even the federal long-term care insurance program has been on hiatus for a few years and isn't accepting new applications. Given that, it definitely makes an annuity more appealing. Something like 70% of people will need at least some period of care in the future, and that care can be expensive.
Yes.
An annuity could help solve that problem for someone.
Exactly. When thinking about it, retirement, people really do need to consider those uglier topics. No one wants to think about or talk about the fact that they may develop a disability or reliance on income nursing care, but these things can and often do happen, and it's very common. It doesn't even have to be a medical thing like a stroke or heart attack. It could very well be as simple as falling down or breaking a hip or another injury. I strongly and really advise people to have a plan in place should such a disabling situation occur. You don't want to be caught off guard by thousands of dollars in monthly fees or the inability to pay for the care that you need because you've stopped working or didn't factor the possibility that you need this or need to add this into your retirement strategy. Plus, if you're one of the lucky ones who doesn't end up needing that care at the end of your life, you've got the extra income as a bonus to play with or spend or even save as you desire.
Here's hoping that we're all the lucky ones.
Cheers to that. Finally, I want to share one more of the perks of annuities. Navy Mutual's fixed annuities grow tax deferred, so there's no taxes paid on the earnings until funds are withdrawn. This means that all of the interest earned by an annuity is allowed to grow unfettered by periodic tax payments, increasing growth capabilities of that particular asset.
I love that. I know so many people who are concerned with their tax strategy, particularly in retirement. So purchasing an annuity sounds like a good way to spread out that liability.
You're exactly correct, Ellie. Say someone were to buy a $100,000 annuity. If they were to pull all that money out at one time, it would be a pretty large tax bill, especially whatever particular year they do it. By spreading it over a course or a period of time, especially their lifetime, they're actually really cutting that annual tax liability down. Furthermore, Navy Mutual's policies are non-qualified annuities, meaning that they can be purchased with after-tax dollars that are not currently residing in a retirement account. So you're going to be taxed on that money when you do start receiving those payments because they've already been taxed.
Much better. Honestly, I think you've forgotten to mention another perk of annuities.
Oh?
They're so easy.
Yes. Instead of figuring out how to budget a lump sum of cash, you might have in a savings account or as a payment from an investment, you know how much money you will get each month from an annuity, so you can make a budget. This provides you with a peace of mind knowing that at least a portion of your bills will be covered because the money is already allocated for and consistently coming in. You don't have to worry about as much of the possibility of mismanaging funds like you might from those, sources of income that may run out because, like with Social Security income, benefits are not paid out all at once. And to tack onto that, you don't have to do anything to receive your annuity payments. Once you've made the initial premium deposit, you will receive those payments without having to log in to any accounts and move the money around. So essentially, once you've set it up, you could even just forget about it and the payments will still come.
Very easy. That's right.
You're absolutely right.
So we've covered the types of annuities and we've discussed some of the perks of purchasing an annuity. Can you talk me through what the purchase process actually looks like?
Sure thing. It's very convenient. The first thing you need to do is consider when you want to receive the annuity payments.
How so?
Well, you can choose to start receiving income payments immediately or at some point in the future.
Okay.
The specific annuity product that you purchase will have an influence or vary depending on your answer. If you want the money now, you need to purchase an immediate annuity, which is one that basically allows you to turn your savings into a stream of income right now. If you don't need those payments until later, you can purchase a deferred annuity, which is designated to grow over time. The principal contribution for a period will start receiving those funds at a later date, but you're accumulating interest over that period of time, so it's compounded.
Got it.
The answer to that question may also depend on how you want to pay for your annuity. If you want to receive income payments immediately, you have to purchase what we call a single premium annuity. It's purchased with a lump sum payment. Here, we require at least $10,000 if you're purchasing a single premium immediate annuity.
So what if I'm interested in an annuity, but I don't have, say, $250,000 just sitting around?
Well, most people don't. But in that case, you may not be able to get an immediate annuity. But that's okay. You may purchase a deferred annuity as an alternative and make contributions to that annuity in installments over time.
Okay, so that does sound like a great option. If I know that I will want an annuity in the future, but I don't have the money to fund it or the need for income right away. Like if I'm a little younger, a little further away from retirement.
Exactly. You're leveraging your youth, which is
Okay.
so smart and the thing to do. Installment premium annuities allow you to make future payments in addition to your initial premium contributions, so they increase in value over time as you make additional scheduled or unscheduled contributions. At Navy Mutual, our flexible premium retirement annuity, which is a deferred annuity, requires an initial contribution of only $100 and subsequent contributions of at least $25. It's a great option for young investors who are still growing in their career and their salaries, but who also want to prioritize their future.
Is there ever the option to make a single payment, but purchase a deferred annuity for the future?
Of course,
Okay.
we're very flexible here at Navy Mutual. There's always that option. Here we call that a single premium deferred annuity. And it's actually a great option because you can lock in a higher interest rate for a longer period of time. And given that returns are going to be dependent on how much money you put into that annuity, it has the potential to really, really grow. Our lock-in periods for these annuities are 5 years, 7 years, or 10. And whatever interest rate you lock in at the beginning is guaranteed for that time period. If you have the money to make a lump sum principal deposit, but also have time to wait, it's a really go-to and great option.
You've given me so much to think about.
That's what we're here for. I've done my job in that case. I know I've been talking a lot about this life income payment option, and it really is one of the huge perks and benefits of annuities, but I think it's important to stress that there are other options when it comes to receiving payments from an annuity.
Let's have it.
Once again, that's what I'm here for. So there's the option to take a lump sum payment. An individual basically liquidates the annuity and gets all of the cash value as a single payment, but the downside,
Taxes.
you got it. There will be a taxable event for the entire amount of the earnings. So that person needs to be ready to face that bill come April.
Well, it's good to have that option if you need the money, though.
Yes.
Okay.
Because you never know.
Right.
There are two other important options, though. And an individual could choose to receive payments for a fixed period of time, with payments stopping once that period is complete. If that person were to pass away during that selected period of time, a designated beneficiary would receive the remainder of those payments ending at the previously agreed upon time frame. So say you buy a retirement home and you have a 30-year-old mortgage.
Okay.
You could end up setting up an annuity to pay out over the course of that 30 years to cover that bill. Even if you pass away before the mortgage is fully paid, your designated loved one can actually keep making the payment without taking money out of their own pocket.
Well, I can certainly see the benefits of that.
It's a huge benefit. And finally, Ellie, there's another great way to set up income payments so you pass the money on to a beneficiary as well. Basically, an individual would choose a joint annuitant.
Okay.
And the payments are set up so that both individuals receive guaranteed payments until one of them passes away. At that time, the survivor will continue to receive a percentage of the original payment amount until their death. That percentage is chosen at the time of purchase.
I'd imagine that joint annuitants are often spouses.
Yes, correct.
Okay.
And that definitely can be the case, but it's flexible.
Okay. So as we wrap up, I'd like to talk just a little more about how someone knows if an annuity is the right choice for them.
Absolutely.
Okay.
There are a few questions that might help someone narrow down that answer, Ellie. First, how close are you to retiring?
Right, because an annuity can provide that guaranteed income and reduce the stress associated with budgeting. But that said, deferred annuities gain maximum advantage if started early. So maybe the better question to ask is, where do you stand in your retirement planning?
That works too.
Okay.
Everything depends on the individual. Next, I want to know if someone has money just sitting there in a savings account or a certificate of deposit earning a low interest rate. This isn't doing much of anything for anyone, and it's very unlikely to be outpacing inflation, especially in today's times. There are people who may be better off with an annuity because they would be able to get a higher rate of return. Annuities are also guaranteed, and that's not a feature you'll find with a savings account. Banks can change their interest rates at will.
That's true. What about people with the opposite problem? Too much money tied up in high-risk investments like stocks?
Yes, they are also great candidates for an annuity because it might be wise for them to diversify a little bit and put money into an investment vehicle that's a little bit safer. Especially in volatile markets, annuities can provide a safety net that becomes more and more important as someone ages.
You're telling me that there's an argument for annuities regardless of risk tolerance?
Diversification is the name of the game.
It sure is.
Finally, annuities offer people the flexibility of investing outside of retirement accounts and building their tax-deferred portfolio. Traditional IRAs are tax-deferred, but they have low contribution limits that you won't experience with an annuity. And they restrict access to the funds due to the nature of them being in a retirement account. Annuities may also be a good choice if someone regularly maxes out their retirement contributions. They offer a great place for the excess money to be put to work for that individual. Or, speaking of retirement, if someone is required to take their funds out of retirement accounts in the form of required minimum distributions, they can then take those distributions and reinvest them in an annuity. The taxes are already paid as a part of being an RMD, so what they do with the cash is really up to them, Ellie.
It sounds like there's a lot of built-in flexibility when it comes to an annuity, but also a lot of stability, making them a great option for people who may be approaching or in a trickier part of life when it comes to their finances. I know you've convinced me.
Once again, that's what we're here for at Navy Mutual, and I do appreciate that, Ellie.
Well, I'm really grateful for your time today, Bill. I think we've all learned a lot, and I hope this conversation has helped enlighten people about the benefits of annuities and how they can fit into a retirement plan.
I certainly hope so too, Ellie. Or, with our annuities here at Navy Mutual, our experts are available to answer questions, talk you through our different annuity options, and help people understand how an annuity can supplement their portfolio to create a more financially stable future. If you're approaching retirement or you're just thinking about, starting a diverse portfolio financially, I really recommend you give us a call. You can reach one of our specialists by emailing counselor@navymutual.org or calling 1-800-628-6011. Let us really help you secure your future, because that's what we're here to do. We're here to help.